Well, the D Street has given a table-thumping response to the first 100 days of the new regime. As we speak, benchmark indices are sitting at a record high. Everyone is excited and hopeful that cyclical recovery will kick in and the healing process will be quick. So how exactly one should analyze the first 100 days of the Modi regime? To discuss that, to dissect that, and to understand the way forward, I have with me on this very special show of 100 Days of Modi, two market veterans. Prabhat Awasthi of Namura and Nilesh Shah, Managing Director and Chief Executive Officer of Axis Capital. Gentlemen, good evening to both of you and thank you for joining us. Prabhat, let me kickstart the discussion with you. 100 days looks like a milestone. Do you think markets are convinced with what the NDA government has achieved and delivered in the first 100 days?
Well, I think if you look at the market behavior, clearly markets seem to be reasonably convinced in the sense that there has been no negative flag which has come up. There have been, I guess, some headline disappointments we've been talked about extensively. But in terms of overall direction and the philosophy of the government, I think markets clearly seem to be enthused by the fact that the government has had no major missteps, and most of the the direction of the economy, both in terms of either in terms of fiscal direction or the tack they have taken, or in terms of what they want to do with industrial policy and the revival of the economy. I think the direction is absolutely on the right track.
Nilesh, in general, some would argue that nothing big has come from the new regime in first 100 days. Expectations were running high, but in terms of an original idea, in terms of a big reform, in terms of a big push, nothing big so far.
No, I don't think so. They have done a lot of things which probably has gone under the notice of the investors and the people at large. As they say, well begin is half done. So the intentions of making things in India, intentions of exciting FDI in defense and insurance, intentions of making India better in terms of ease of doing business, these are all statements in right directions. And obviously everything can't be accomplished in first 100 days, but the intentions of making India a manufacturing base is something which is very, very powerful. It will help us in create employment, it will help us in create jobs, and it will help us in sustaining growth.
Prabhat, I'm with you when you say that, look, no missteps have been taken and that's encouraging, but no major steps also have been taken.
Well, I think there are 2 points in this. One is that what constituted the problems of Indian economy. I think the problems of Indian economy in the last 2-3 years, you would agree, had nothing to do with the big idea or the paucity of big ideas. It was all about the execution of small ideas, which actually tripped our economy in the sense that you couldn't implement in various sectors. For example, non-availability of coal. It's nothing about big idea, but the fact that you just had to sit down and execute on availability of coal, either through auctioning process or faster environmental clearances. Similarly, in telecom, for example, it was execution of policy rather than big reform ideas which were missing. So I think the first and most important thing is that the state of Indian economy doesn't necessarily depend, or the improvement in the state of Indian economy doesn't necessarily depend on the big ideas per se. I think it is really important to get done, on everyday basis, things which are necessary to be done to improve the pace of economy and growth of the economy. So I think from that perspective, we seem to be fine. Whether they will have big ideas, I think there are obviously some constraints which the government is working under. Their insurance bill, for example, they couldn't pass because of the fact that they didn't have numbers in Rajya Sabha. And that might take time still. But I still think after, talking to a number of people in the government and having understood what they're trying to do, I think the pace of decision making in this government is far faster, and eventually will result in a recovery which will probably be very visible to you in about 6 months' time to 1 year's time.
Prabhat, so from a market standpoint, what are or which are some of the low-hanging fruits which the government needs to pluck in next 1 year?
So I think what are the basic issues in terms of the overall economy? I think first of all, I must say that this government is fortunate to come into power at a time when some of the basic issues which are facing the economy are already behind us. And what I would mean by that is, for example, we don't have an external situation or external economy which is imploding. Rupee has become stable, our current account deficit has come down. Our diesel prices have largely been raised to a level which is now at parity. Electricity prices, which was a very thorny issue for a very, very long time, have been raised, and the power sector is far more stable today than it was 2 years ago. So I think the first and most important thing is that the government is not firefighting in terms of dealing with issues of day-to-day survival. I think that is behind us. I think from their perspective, therefore, the key job actually, in some sense, if I were to put it right, is one, to revive growth, which is going to happen through investment cycle. Which might include, a number of steps, not one step, but a number of steps in various sectors. For example, we know that there will be more projects given out this year in roads. They need to address the coal issue, and if the Supreme Court issues are behind us, then they can start addressing issues with respect to coal, railways that they have talked about. So investment cycle in terms of policy is one very important aspect of getting the economy back on track. And second is obviously fiscal. Because fiscal process or fiscal consolidation in a credible manner will eventually lead to growth recovery with sustainable current account deficit and also with lower inflation. And I think as long as they can address these two issues on an overall basis, we are home and dry. Obviously, it looks very simple in terms of when I say it, but it's a fairly coordinated effort and Herculean effort, especially given the fact that our investment cycle had come down to, had slowed down dramatically. And to get confidence back will take a sustained effort by the government. So I don't think it's a switch that you flick, but it's a consistency of effort and policies that will go a long way in terms of reviving the sentiments.
Nilesh, I guess for the moment, no one is challenging the intent or the policy direction. But unfortunately, there is very little on-ground activity. And let me just throw in some examples, Nilesh. Nothing big has come on GST so far. No big movement so far has even happened on the land bill front.
See, it's again like, as an optimist, I will say glass half full, whereas as pessimist, someone will say glass half empty. If we see the environment in which the world is operating, look at our peers. Brazil is officially sinking into recession, whereas we have grown at 5.7% in first quarter of this year, which is highest in last 2 years. It's a significant jump over 4.6%, which we witnessed last quarter. So clearly our economy is on the way up. Inflation is moderating, currency is stable, sentiments have gone up, and hopefully investments will start following that. Growth has started bouncing back. So in the first 90-100 days, clearly things have started improving. They are moving in right direction. Now, as I mentioned, the ease of doing business, bringing commerce to the foray is something which is very, very critical. Make in India is a great concept, but now can we facilitate that by easier land acquisition norm, flexibility in labor supply, availability of equity and debt capital, multiplicity of regulations and governance can be simplified in one window clearance. Clearly, these are all the steps which needs to be taken so that India can really make big in terms of manufacturing and create jobs and employment, which is so much needed. But this is going to take time, and I think government is moving in right direction.
So Nilesh, allow me to take a leaf from your answer and throw that to Prabhat. Prabhat, Nilesh mentioned that cyclical recovery has kicked in, sentiment has improved. Are you also of the view that cyclical recovery for Indian economy indeed has kicked in? And if I look at anecdotal data, which is cement dispatch numbers, auto sales, air traffic, all of them are pointing to a higher demand.
So Nikunj, that is, I think, the most interesting aspect, and it's a good question. It's a very good question that you ask, because in all the talked about the big reforms missing from the current government's agenda, or so far at least in first 100 days, what people sort of are forgetting is that economy, the indicators in the economy seem to be extremely positive with respect to the growth, numbers. For example, as you rightly said, cement demand seems to have picked up. The demand for oil product has picked up. Automobile cars are doing extremely well. Steel demand has picked up. In general, our railway freight. So everything. I mean, you look at almost power plants, for example, are producing much faster, and the PLFs have picked up. So the fact is that overall economic numbers in the last 3-4 months, or even 6 months, I would say, have been on the up. That could be because of the fact that the removal of macro distress from the Indian economy has led to some amount of cyclical recovery. And secondly, there is a global recovery, which is overlapping with that because our exports are growing. And third, and which is also probably a very important factor, is the sentiment or the confidence level of both consumers and corporates after the formation of a very stable government in the center. And all these three factors might actually lead to a cyclical recovery, which might actually surprise positively, even before the structural factors of the reform process start to hit us, or in terms of faster decision making start to hit us. So just this recovery itself might be quite powerful, at least as far as markets markets levels are concerned, and the sentiment in the market is concerned.
So Prabhat, my next question to you is that how much of the cyclical recovery is already in the price? As markets are no longer trading at rock bottom prices, Nifty is sitting at an all-time high. Just about everything and anything is up 40 to 50%. It's a rising tide for the moment, which is taking everything up. So is all the good news in the price?
Well, so I think the only way to answer that, Nikunj, is by looking at overall valuation of the market. When you look at Sensex valuations, for example, closer to 15.5 times now. If I look at 5-year average valuations of index, closer to 15 times. So you're basically at 2-3% premium to your long range averages, which is neither here nor there. I mean, in 2011, I think market had climbed to about 18 times when there was more bullishness about growth in general. So I think, if you look at from the bottom, obviously markets have traveled a very, very long distance. But the only objective way to answer the question of what is in the price is looking at what's happened to valuations. And on overall valuations, I think there is not that much. I mean, one cannot get very bearish on that. Now, within that, you can obviously look at subsegments, and obviously you can sort of clearly see that there are some sectors which are trading at significant premium to last 5-year trading averages. But on average, there are sectors which are trading cheaper. And the net effect is that market doesn't look expensive on an overall basis, which we think is finally tells you that while there might be bullishness in general, but it is not yet in zones which I would call frothy.
All right, gentlemen, stay with us. Let's take a quick break on the show. When we come back, we'll talk about specific sectors, and we'll talk about specific ideas which indeed could kickstart the Indian economy. Welcome back in conversation with Prabhat Awasthi and Nilesh Shah, and we are trying to understand and dissect the first 100-day scorecard of Narendra Modi government, what they've achieved and what really needs to be done on war footing so that Indian economy bounces back. Nilesh, for the moment, there is a feeling of carnival. Everyone is excited. There is a little bit of hope trade also which is built in. But do you think somewhere this market will give a benefit of doubt to the new government because the intentions are right? So on-ground activity may have not picked up, but since the finance minister, the prime minister, they've struck the right chords, will that go down well with market watchers?
So will markets fluctuate a little bit here and there? The answer is quite yes. But will market be willing to give more longer term outlook, more longer term benefit to the government? I believe yes. The markets probably are going to look at the direction rather than the magnitude. And in terms of steps being taken by the government, in terms of improving commerce, improving manufacturing, I think markets will be willing to give a little bit more time to the government to take actual actions on the ground.
Nilesh, let's address the most critical issue, and the issue of subsidy. Do you think government should now move aggressively towards LPG and kerosene reforms? Because that is the tricky part. What up until now the government has done is that simply taken the diesel reforms forward, which was not their original idea. That was a gift from the previous regime.
Undoubtedly, the linking of Aadhaar to the actual user is something which is very, very critical. I was present in Finance Minister's Mumbai meeting last week, where he clearly mentioned that he doesn't deserve getting LPG subsidy, and probably the entire audience also didn't deserve getting the subsidy. So if government can take steps to rationalize subsidy of LPG reaching to the right consumer, I think it will be a step in the right direction, and it will free up the resources which government can then use for other parts of the economy.
Prabhat, this question is coming your way. And Prabhat, for a while, we've not seen a sizable correction in global markets. This year, volatility is actually at a multi-month low. So do you think global concerns could really haunt us in the second half of this year? And if globally things destabilize, it could really usher in a big correction?
Well, I think some correction would happen. I mean, it's very, it's not quite out of question. First of all, because obviously markets have done well. People are overweight India in general. Equity markets in general, there has been a lot of bullishness which across globe. So, so a stumble is quite possible. But again, I would say that the taper, which was a big fear earlier. The reason for actually monetary accommodation to sort of move off in US will be that the growth has really picked up there, and that essentially means that it is not because of rates are not going up because of high inflation or because of risk care, etc., etc. They are going up because growth is picking up. To that extent, I think you will not see a lasting correction. That's the first point. Secondly, I think India's fundamentals are much better because our current account deficit is much more manageable, and capital withdrawal because of taper is far more relevant to an economy which has a large current account deficit, which is no longer the case in Indian market. Our forex reserves are up quite strongly. We have much higher credibility of central bank today, Indian central bank, and that also gives comfort to markets. Thirdly, we have much more stable government. So I think in India's case, especially, there could be a correction for sure. But I think there will not be a lasting correction. So long as growth remains on the side of the markets, these corrections will be taken their strides.
Nilesh, the next big trigger for Indian market really could be a stable gas price regime. Government is committed to increase gas prices by 30th of September. Could that be the next big trigger for our markets?
I think for any economy to grow, energy is critical. India imports bulk of its energy requirement in form of oil. So clearly we need to have a comprehensive policy which does not only cover the gas and oil, but also thermal, solar and wind and everything else. The kind of abundance which we have in terms of solar energy and wind energy, and where the prices have started becoming quite favorable, I don't think so we are encashing that as much as we should have encashed. So it's not only just the gas which is critical for the economy, it's also the thermal, solar, wind, and at some point of time we'll have to develop a comprehensive energy policy which encourages investors and which gives a win-win situation for consumer as well as the investor.
Prabhat, let's talk about flows, and for the moment Indian markets clearly are in a sweet spot because global investors have been our fair weather friends, and domestic institutional investors who've been net sellers for 3 years on the trot now, they are also aggressively investing.
Yeah, so that's absolutely right. For foreigners, well, I don't know, they've been fair weather friends because they have usually not taken out money except in 2008, and even there I think the number was not that big, and it was largely arbitrage outflows, related outflows. So foreigners have typically been, buyers of the market through thick and thin, except with very few exceptions. And if the overall construct of the economy remains positive, then I think those flows will remain supportive. Domestic investors, is another story. Obviously, one is that given the high interest rates in India and high inflation, there was a logic for them to move away from financial savings. But if the government fiscal commitment remains high, then I think even the domestic savings allocation will move more towards financial assets, and in turn more towards equities. I think we are seeing a beginning of that. It will not be a very quick process because interest rates in the system are very high still, but it'll probably, I think we are sort of starting to see that. Maybe in 1 or 2 years' time, these numbers will get stronger. So I think flows definitely will be on the positive side.
Nilesh, power sector, that's a big thorny issue. It's quite paradoxical that India needs power. There is surplus power capacity, no fuel linkage, and low utilization rates.
See, essentially, what ails the power sector? One thing is in terms of connectivity. It's not that we don't have coal, but it's just that we are not extracting enough. The second thing is related to charging for the power correctly. We have one of the highest T&D losses. In most countries, it will be transmission and distribution losses, but in our country, partially it could be theft and dacoity losses. The third thing is related to the recovery of dues from the high-end users. Clearly, we need to create a solution which encompasses the total environment. And it's not that in the past we haven't done this. When Suresh Prabhu was power minister, he did comprehensive reform in energy sector, and it kind of brought it back into the investors' radar and gave good return to the investors as well as the consumers. We have also seen Gujarat model where farmers were provided high power against assurance that they'll make the payment of the bill on time. So there was no concessional or free power, but there was proper power for proper fees. I think that model will have to be implemented across the country. So even if we go back to what we were doing just 10 years back or 12 years back, the same thing needs to be replicated in terms of providing fuel linkage, ensuring that the T&D losses are minimized, and ensuring that there is an appropriate and fair distribution of cost to the users rather than getting into the short-term vote bank kind of thing whereby we are providing free powers to the farmers. It doesn't solve anyone's problem.
Right, so Prabhat, final question to you. Let's filter all the noise and looking at peer valuations and earnings and your projections for FY16, what kind of portfolio construct are you recommending to your clients? Because for the moment, it's a problem of plenty because just about everything is moving up. Defensives are in demand because America is bouncing back, and cyclicals are in demand is because there is a hope that the Indian economy clearly has bottomed out and cyclical recovery has kicked in.
I think it's a problem of plenty in terms of the delivery or the fundamental direction, so to say. But if you start looking at, start combining valuations with that, I think end of the day, the first and most important call is that the markets have a bit of steam left. And I would say that, I talked about valuations sometime back of 15.5 times, not very expensive. Growth is recovering. So I think on market, we can take a positive call. That's a call that markets will be upward trending. Within that now, therefore, we have to see where the valuation comforts are larger with respect to the fundamentals. Now, for example, it's true that even consumer companies are growing, but their valuations are too expensive with respect to the kind of growth they're exhibiting and with respect to the other opportunity costs in the marketplace. So I think at this point in time, it is safer to say that the domestic market opportunity, given the valuations and given the cyclicality or given where we are in the cycle, are probably better. So we like, for example, financials, we like autos, we have overrated capital goods after a long time. And frankly, tell you the truth, we're probably late on that, but banking, we've been bullish for a while now. So those remain in place. The between defensives, I mean, we have been underweight consumer for again a very, very long time, 1.5 odd years. Pharma we've underweighted about 3 or 4 months ago, and we continue to hold that view in terms of just valuation perspective. Because while the growth delivery is very strong, the fact is the valuations are also not cheap. And third is about IT. IT we remain bullish because while it's sort of a defensive or it's not an export play, the valuations are still not very expensive with respect to growth. So the only out of three classic defensives, so to say, we sort of still like IT in terms of valuation construct. The rest of our sectors are largely domestic in nature.
Nilesh, final questions. On a scale of 1 to 10, if you have to rate the first 100 days of the Modi regime, what number would you like to assign?
I think I'll give it a rating of about 8 out of 10. The steps are in right direction. Now it's time that the speed increases.
Nilesh, Prabhat, gentlemen, good to have you on the show. So the first 100 days of the Modi regime are over, and so far D Street has given a thumping response to the first 100 days of regime. There are green shoots which are clearly visible, but for economic recovery to kick in powerfully, lot of policy reforms have to kick in, and markets are hoping that indeed one day they would kick in.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.